What's up, everyone? It's Jason here. Hope you're having a great day today. Today, we're going to be breaking down AMC stock price, where I think it's going to go from here. Also, want to go over these bond markets and AMC bonds, and how that could or may not affect the price, and what Michael Burry just said about AMC and other meme stocks. If you could, make sure to smack the like button down below. Notice that this video helps out more people learn about AMC and stay up to date with everything that's going on. And if you're not a sub, hit the sub button down below, and let's get right into it. Real quick, if you don't know what I'm using here, I'm using Webull. There's a link down in the description down below. If you sign up with Webull, you put at least $5 in right now there in the month of July. You also get 2 free stocks worth up to $2,000 right now. You can buy and sell 5 hours pre-market, 4 hours after-market, and you get these tier 2 NASDAQ views right now for 3 months as well. Well, as you can see, the day was not the best day for AMC. Currently, we did finish at $54.22. Currently, though, we are at $53.83 in aftermarket hours. Aftermarket hours hasn't had a lot of umph or move, and it hasn't had a lot of move or umph in the last week or two anyway, so I'm not really worried about aftermarket hours or pre-market. I do think going into tomorrow, pre-market, though, we could see a nice little bump in the stock price going into Friday. But again, I do think tomorrow is Friday, and anytime a Friday comes up, especially for a 3-day weekend, we have a lot of fight from the hedge funds. Remember, we are not open up Monday for market hours, so I do think tomorrow's going to be a fight. I do, though, however, want to stay optimistic and hope we can get to $60.01 because we have a lot more options in the green. But hey, if we finish tomorrow over $55, I will be extremely happy. I would count that as a win for right now, because right now the hedge funds have been loading up and then dumping into the markets over and over again this week to try to deter us from continuing to buy and continue to hold, and it's not going to work. This morning we did enter the market though right at $57. We quickly went up to $57.71, and from there, though, was a downturn all the way down to $52.53. But in power hour fashion, we did triumph back into power hour. We moved up about $1.50 to $54.22 going into the market aftermarket hours. So I am happy with that. I'm glad we've seen some resurgence. We had a nice fat boom candle right here, right on up. Big, nice candle, and it's led off into there. That's good news, though, right? So we can see we have some lot of resistance when they're trying to push us down. That eventually we just go hard. And that power hour today was nice, and I'm glad to see it. I do think right now, though, in this weird turbulence we're in, we're almost like 55 is like the new 8 back in the day. Like I've said before, I think we're going to see this slowly squeeze until we have margin calls. Now, margin calls are going to be nuts when those start happening. And I honestly do think we can start seeing our margin calls once we get the price up to say $80 to $100 area. And it's eventually going to get there. We stay down these levels and we're going to dump up the new highs, right? Then we'll get pushed down again a little bit. And we find some new ground, some great ground or whatever, and we move back up again. The slow squeeze is slow and steady, but it's going. Remember, people said this was a stock that was going nowhere at $5, and here we are still at $50+. And people said that when we get to $70, it was going to go right back down to $5. Here we are, guys. This costs us nothing to hold, but guess who it is costing to hold, though? Hedge funds. It's costing them loads of money to hold. So that's all in with that is costing us nothing to hold, costing them lots of money to hold, and eventually they'll give in or have to give in due to margin. Looking over the trade alerts at the large print orders, we have 4 big large print orders. Remember, these do go through dark pools. So 9 hours ago, we had one for 142,399 shares at a price point of $56.77, and that was for $8 million. 5 hours ago, we had another one come through for 162,615 shares at a price point of $54.55, and that's another $8.8 million. 5 hours ago, we had another one come through right after that one for 141,000 shares, and that was for a price point of $54.56, and that was for $7.7 million. And then finally, 4 hours ago, the last one we had today through this large print order coming through the dark pools was for 122,538 shares, and that was for a price point of $53, which is $6.5 million. Remember, these are dark pool orders. So what this usually means right now is that the hedge funds are continuing to rack up through the dark pools right now, and eventually some of these will get flushed out into the real market. Looking at Stock Code Tracker, we do currently have 39,843 options that would be expiring in the green, but at $55, which I think we can get to, and I know we can get to, we'd have another 9,448,000 shares would be in there. So that would end up about 50,000 call options that would be in the money. Now, currently, we do have 195,646 puts that are out of the money, which is good. The more puts that are out of the money, the better. So this is a good number to look at. Now, dark pool percentage yesterday was at 61.7%. Guys, this remains massively high. 61.7% of all orders are going through the dark pools. Again, go look up almost any other stock. It's like 10 or 15%. Crazy how many of these shares are going straight to the dark pools every day. The short percentage currently is at 58%, 57.9, which is 58%. Massive high short percentage here as well. If that float is that high, which I expect it to be in the 40 to 50, 60% range, guys, when this thing does get margined, this stock is going sky high, going to the moon, obviously. 100% there. These are all good numbers that are moving in the right direction and continue to tell us that, hey, we're right, and that a lot of these other people are very definitely long. We're the ones doing the DD here, and they just know what they're talking about. Michael Burry, guys, you guys know who Michael Burry is? The big short investor, Michael Burry, says that Reddit-favored meme stocks will crash as soon as new money dries up. So he's saying this is going to crash before we get a push up. Now, again, I think he's wrong. As long as we're sitting here hodling, we're good. We own the float. So the big short investor, Michael Burry, believes Reddit-favored meme stocks are set to crash like the .com and housing market bubbles of previous decades. Barron's reported. We're running out of new money available to jump on the bandwagon, Burry told. Now, again, Burry has a lot of weird stuff he likes to say. Let's just be honest. Burry was one of the first investors who spotted profits in the subprime mortgage crisis. I know a lot of you guys have a lot to say about that. Let me know down below what you guys think about what Michael Burry said. Personally, I've read I've been in the market for 11 years, and I've read some of the stuff he said over time. Again, somebody who cries wolf is eventually right every once in a while, right? Or, as they say, a dead clock is right 2 times a day. You know what I mean? I'm not going to put a lot of effort into this story just because I had a lot of people ask me about it today. Is he right? I mean, eventually, right, the stock's going to come down, but that's after the squeeze. As long as we continue to hold, as long as we're not selling, right? People start selling, that's a different story. But as long as we're holding, that's going to happen. So on to the next story. This covers right here the bond market, right, and how this thing came to effect. If you guys have seen, there's been a lot of frenzy story on YouTube and other places about how AMC Bonds and how they're shorting to the bonds. Obviously, those stories were a little bit exaggerated. It's YouTube. I get it why YouTubers are making things like that and doing those stories. I get it, or maybe they just didn't understand the market and how this thing works. This whole bond thing started from a Reddit post, right? The Reddit post finally came up and updated to show what really happened here. So the update title should be 600 million AMC debt settled with Silver Lake. So AMC settled $600 million worth of debt with Silver Lake. And that's where this whole bond issue came from the S3s. Now, we had a lot of people going crazy today. Let me guys know what you guys think about that story. Again, I think that was a little bit overhyped. As somebody's been in the market for a long time, I've seen these things happen before. When I was watching some of the videos, I was thinking, man, these guys probably haven't been in the market very long. And two, they probably either don't know what they're doing or they're just hyping this thing up for views on YouTube, which is fine. But again, to me, it feels like when they're doing these things, what happens is you have information that goes out and it gets people really, really hyped. And this is fine, right, hyping people up. But what happens is when these things, don't really amount to anything, or whatever happens there, and the prices that move, or this doesn't work out, you kind of dishearten people. And it makes people's faith in you or faith in the stock go down a little bit. Not everybody, but some people will be discouraged by that, either sell or not feel as confident as they were before when they feel like they're getting lied to. And I get that a lot of these people probably didn't know what they're making videos on and just read off this post. But we got to do a little more evaluation and look into the things that you're reporting on, especially in the stock market before you're flying out videos like crazy and just trying to get the views off of them. Because again, it disheartens people, which isn't good. And I don't think it's right. But I did want to discuss this. I have a lot of questions today about, with the SE3 filing. What was it for? It was to pay out $600 million of debt to Silver Lake. So that's what it all couples down to. Again, let me know below what you guys think about that. I don't want to go too much into it again because I don't want to down talk other people. But I feel like hopefully people maybe might, probably not, but maybe some people puts a little more effort into looking into things before they flop out posts, right? And get people overhyped and then get people discouraged all at the same time. Last but not least, AMC is now designated by NYSE as Threshold Security. In short, threshold securities are those at which fail to deliver. Remember, guys, we had a lot of failed delivers as well. What does this mean for the larger AMC picture? The more one zooms into the stock market's underpinnings, the more surreal it gets. Today, the NYSE has designated AMC as a threshold security, shining further light onto the situation of AMC shares that failed to deliver. So right now we have a large failed to deliver problem here. So the mother of all squeezes right here revisited MOASS. Yesterday, the tokenist reported on another tie-in to the great short squeeze saga. Both TD Ameritrade and Schwab brokers announced their increased margin trading requirements to reduce the risk themselves for traders who wish to engage in the trading of two mega shorted stocks, GME, AMC, and these stocks already drained $12 billion from hedge funds. All market players are fortifying their financial walls. From the multiple House hearings addressing the short selling and faster settlement times to DCCC, OCC, and the NSCC changing rules, these moves serve as bricks to the wall off what is popularly dubbed as the mother of all short squeezes. While covered short selling is part and parcel of the U.S. stock market, the MOASS relies on a couple of key ingredients to represent an anomaly. Purported naked short selling. Short selling stock shares that haven't been registered as borrowed. Instead, they puff into existence as derivatives. In turn, this increases the volume of the tradable shares visible to a brokerage app users as regular stocks. Scale of the naked short selling. Both of these ingredients are strongly believed to have manifested themselves acutely in the form of phantom shares, resulting in $359 million worth of GME shares failing to deliver. They accounted for over 1 million GME shares that got lost in transit. NYSE adds AMC to the threshold securities. One of the regulatory mechanisms to mitigate the risk generated by naked shorting and its predictable failure to deliver is to place the asset under threshold securities. So right now we are placed under the threshold securities, AMC is, as well as the ticker, under the SEC rule set regulating short selling, Regulation SHO, established in 2005, threshold securities under Rule 203C6, as defined as threshold securities are equity securities that have an aggregate failed to deliver position for 5 consecutive settlement days at a registered clearing agency. National securities clearing corporations totaling 10,000 shares or more and equal to at least 0.5% of the issue's total share outstanding. In other words, it's what many believe to be the proxy for detecting naked shorts, phantom shares, the fail to deliver. In accordance to Regulation SHO Rule 203, members of the clearinghouse are obligated to immediately purchase shares to close out failure to delivers. As of last Friday, June 25th, NYSE designated market maker DMM listed as AMC as threshold securities. So we've seen this, obviously, this last Friday. It got designated on that list. From the already documented 359 million failed delivered for GME shares alone during that period, it is understandable why they got onto that list. AMC is now on it. It strongly suggests that the many trades that have already failed. Currently, AMC has 513.33 million outstanding shares under its criteria set by the rule. 0.5% of that number would qualify for a threshold security, meaning 2.56 million shares being naked shorted there, aka failed to delivers. Adding to the 5 consecutive days part of the criteria, this would yield an astonishing 12.8 million failed to deliver shares as the maximum, which would represent 12 times higher volume than GME's failed delivers during January. The big thing here to look at, though, guys, is that, hey, AMC got added to the threshold securities list now as well, just like GME is, and AMC was even more than GME was back in January, which should tell you that the upside of AMC is massive, and what we've been talking about this entire time. It's crazy to think that this has been going on this long and how long this is going to continue to go on right now before we see these things probably even go into effect and before we even see these failed delivers even covered and we see these naked shorts and synthetics, or aka ghost shares, return, right? And you would know that when it happens again. And then I think we'd start having margin calls and this price skyrockets. If you guys haven't, make sure to like this video. Make sure to share this video everywhere. Reddit, wherever, man. Discords, Twitter, everywhere, man. Let people know what's going on. AMC just got added to the list as well. And this is actually really, really good news for AMC. And if you haven't joined our Discord, Click down below, join our Discord. Love to have you guys be on Discord as well. I will see you guys in the next video. I'll see you Sarside. Peace out, fam.